In this video, we will be taking the first step into risk management by defining what risk is, how it can commonly appear in our daily lives, and what you can do to mitigate it. Let's start by defining risk with this example. Imagine you are here at point A, and whatever goal you want to achieve is at point B. You may have some sort of plan or roadmap for how you intend to get there. A risk is anything that might get in your path on the way. Some risks you can simply avoid. However, there are others that aren't so easy to get around. Some risks are unavoidable and could block your path entirely. Luckily, if you anticipate the roadblock, you can bring tools along to help you get past whatever risk is in your path. Identifying which tools to bring with you is what we call risk management. Every person has a different need and preference for what tools they'll bring, so it is important to figure out what tools are the best fit for your situation. So let's take a look at what these so-called risks look like in our everyday lives. You'll find them to be quite familiar. Examples could be a car accident on your way to work, or maybe a tree falls on your house in a storm. It could even look like taking a slip in an icy parking lot. The reality is, this list can go on and on and on. Some of these examples might be a bit more dramatic than others, as you can see. While this list can be overwhelming at first glance, the majority of the risks you'll come up with can be easily managed. So let's focus on those risks and their management techniques. Earlier, we talked about how you can bring tools with you to manage unavoidable risk. The most common tool you can use is insurance. Before we go into the different types of insurance, let's quickly discuss how insurance works. Insurance is the process of pooling money to cover a large group of people for a specific risk. Each person pays a premium into a large pot that is managed by an insurance company. When someone that has purchased insurance suffers a loss from that risk, the insurance company disperses money to that person from the large pot to reimburse them for the loss. This method works because it distributes the costs of a risk event among a large number of people to make it affordable for the average person to manage their risk when they may not be able to afford it otherwise. Alternatively, some people choose to self-insure by using money that they've saved up to cover any costs that may arise due to a risk event. While that method can work for some, most people opt to leverage insurance to reduce the possibility of the costs exceeding their savings. Now let's talk about the different types of insurance you can buy. If you were to get into a car accident or have a tree fall on your house, those scenarios would be covered under property and casualty insurance. Falling under this umbrella are auto, home, and liability insurance. If an accident made it difficult or impossible for you to work, disability insurance would protect your lost income. If you were to get sick or injured, health insurance could help pay for medical bills that arose from that. In the event of an unexpected death, life insurance would help to protect loved ones and dependents from any financial obligations or hardships that arose. As we age, we run the risk of outliving our savings or needing assistance with our normal living. Common solutions for these are purchasing annuities and long-term care insurance. Other common insurances can include pet, business, identity theft, travel, and more. As you can see, there are many insurance solutions available to protect in different situations. Once you zoom out on these potential risks, they become clearer and easier to manage. There's much more to cover on these different types of insurance, so check out our other videos that go into more depth on each one. By identifying the risks that apply to your life and understanding your options to mitigate them, you can secure a safe path to the financial future of your dreams.